Welcome back. You're watching our special coverage of the India 2020 Stars Axis Capital Conference. I've been in conversation with Nilesh, Shah and Dharmesh Mehta. Nilesh, you have a lot of companies attending the conference, of course. What do you expect to hear from them? Because if you look at the numbers this quarter of some of the consumer-focused companies, they've not been great. How much more would the market need to wait to see actual improvement in earnings where marginal signs are visible and even the macro actually discernibly pointing us towards a 15-20% plus growth in earnings?
I mean, if we look at the corporate sector and talk to them, there is a complete range of divergence which is available. On one side, you have e-commerce companies which are on cloud 9 right now. They have got the funding in place. They are able to push through sales by aggressive pricing. And for them, 24 hours in a day is limited. On the other hand, if you come to the other extreme, you have power companies which have issues related to coal linkages, which has issue related to recovery of money from the state electricity boards. And clearly for them, servicing debt burden is a challenge. So within this two extreme spectrum, where on one side there is complete optimism, and on the other side there is complete pessimism, you have the entire corporate India sitting over there. From an earnings point of view, clearly there are sectors like technology, banking and financial services, pharmaceuticals, which should be in a position to deliver accelerated earnings growth, either because of the improvement in the economy or because of the volume and margin expansion both coming through. However, the crucial thing for the overall economy is this revival in consumer sentiment, which will have a multiplier effect into the overall economy. And this is where we are seeing wide divergence today. On one side, the consumer durable companies have seen fairly good pickup in this Diwali, whereas on the other hand, some of the regular FMCG companies haven't witnessed that kind of revival. I think the crucial thing for the market and probably for the growth is, can we accelerate the IIP growth? Can we accelerate the manufacturing sector? Can we accelerate the job creation, which creates a virtuous cycle of income creating growth and growth creating employment and employment again creating income? When today, from a corporate India, clearly the demand is towards easy availability of land at competitive prices, faster conversion of land acquisition process, higher productivity on the labor side, better infrastructure so that they can put up their project on time. When clearly they need action on the ground to enhance, to encourage manufacturing, which will create jobs, and that will kind of guarantee you virtuous growth cycle.
Dharmesh, do you see any of your investors that you speak to getting a little impatient because the recovery is taking longer than they expected? Right now, in the last 6 months, there's been a lot of hope. Stock prices have gone up. Do you hear any investors saying, but where is the recovery? We can't see it yet. Or do you think investors will cut India a long rope at least till the budget before they start getting impatient?
Well, they have done something for the investors to cheer about, like as I've mentioned about the oil deregulation, labor reforms. So it's not that the government has not done anything since coming in. So in fact, they have met the expectation of investors, and it's only on the other like coal and power side where they are waiting for further clarification. I think so. Investors are in that sense very happy, and that's the reason you're seeing markets climbing the wall of worries. And hopefully by the budget, you would have heard much more announcements also. Plus in budget, there will be a lot of much more aggression by the government to ensure that investors remain happy and invested in India. I think so, Udayan, people are not taking a short-term call on India right now. If you look at India in the overall global market, I think so India is the only country which showing high growth prospects, lower interest rates environment and underinvestment. So I think so India is that way a top favorite. So even if something happens short-term as a disappointment, I think so it's the markets currently in India is a higher top, higher bottom kind of market. So people have to buy in those dips when those disappointments come. And so far, they haven't been disappointed so far.
Nilesh, just to talk about risk factors for a second. Of the two risk factors, one is some kind of global turbulence which pegs us back or leads to a market correction, or the factor that I just discussed with Dharmesh, the fact that growth takes longer than the market is pricing in to recover, which is a local factor. Of these two, what would you say is a bigger risk factor for the market currently?
When the biggest risk factor, according to me, is this huge consensus that India is a long-term bull market. Today, virtually every global strategist believes that India is the place to be in, and it's a must-invest market. The common sense suggests that whenever there's such a good consensus, any adverse reaction could create a disproportionate impact. So if the Fed starts tightening earlier, if there is an emerging market sell-off, if at some point of time risk appetite returns and people start saying that, oh, Russia at 66% discount to India's valuation, or Brazil at 40% discount to India's valuation, or China at half the valuation of India is a place to be in, then certainly they will create an impact onto our market. But my feeling is that these are all temporary effect, these are all short-term effect. The fundamental nature of the market today has been changed in terms of buy on dip market. There is a fair amount of left out feeling among domestic investors who wants to invest into the market at a correction, and it's unlikely that market will be that kind that it will come down so that all the left out investors can invest and then start moving back. The other important thing which has happened is that this very, very sharp polarization towards quality of stocks. When clearly investors have become discerning, they are sticking to their valuation, they are sticking to their governance standards, and we have seen that, despite the market setting all-time high in terms of numerical numbers, the amount of issuance which has come from the sectors which desperately need equity is fairly restricted. Clearly investors are looking for policy clarity before putting their money. So this shift towards this shift towards quality gives confidence that market is fairly balanced in terms of flows as well as supply, and this should create a reasonably good foundation for the longer term bull run.
Dharmesh, what are you telling your attending clients about sector allocation right now? Because there seems to be money coming out of some of the old favorites and overowned sectors like IT, even consumers. Do you see that appetite towards taking a little bit more risk and going down the cyclical ladder for the next couple of years for people who are betting on India?
Well, going on the high risk sectors like, power sector, coal, and those related to infrastructure will actually happen only after the government reforms are announced, and what kind of, strategies they put in place to ensure that, people can take a longer term bet on these sectors and not get stuck after they invest and suddenly the policy changes. So that will only happen once the policy changes are announced. Meanwhile, obviously we've seen a shift in banking and domestic consumption stocks. So I'm not on consumer stocks, but anything which is related to domestic consumption, which is banking and the other stuff, that's a hot favorite right now. And I think so that sector is going to receive maximum inflows in the next coming months as the India story develops.
What level of interest do you see in mid-caps? Because their too performance has been patchy. Some have been good this quarter, some have still not started picking up. Do you hear a lot of interest from your clients on mid-caps? I mean, moving down the market cap ladder?
See, if somebody is taking a long-term bull call in India, then obviously you want to be in mid-caps and small caps because they generally outperform the large caps in a bull market. So definitely this is a period to look at small and mid-caps. But again, it's not going to be like across the board. As you say, there will be certain stocks which will continue to do well, while some of them will languish, and some of them may be concerned, as I said, with the policy announcements. So they may still suffer for some more time till that happens. But definitely the way the India is shaping up right now and the outlook is there, I believe mid-caps and small caps should be a good bet by investors.
Dharmesh, Nilesh, you have a great conference. Thank you very much for your time today and for joining in.